I'm George Nordhaus, and welcome to Monday Morning. Something different today. Something different's happening in our industry that we all need to know about. And boy, I've got the right guy to tell about it because he's been on from the very beginning. We're going to be talking about the challenge of direct online business insurance sellers. We all know the commodity situation with the Geico's of the world and everything else for personal lines. But what about the small business insurance customers? Are they going to be buying? And boy, it's a serious thing, and I think it's something we all have to know. Sam Friedman is going to be doing for it. He's the insurance research leader at Deloitte. You've probably heard of Deloitte. I would think you have. Let me tell you a little bit about Sam. Sam is a, let me see if I can see Sam's picture here. There he is. Okay. Sam is the research leader. What's that mean, Sam, an insurance research leader?
Well, at Deloitte, I head up a team for the Center for Financial Services that does studies in insurance, banking and securities, and investment management. And we do original consumer research as well as like surveys and such for consumer preferences. We've looked at personal auto and homeowners. We've looked at life insurance. And most recently, of course, we looked at small business insurance buyers. Nice. And, we conduct focus group surveys and such and then publish the material for the general public.
Got it. So that's interesting because it's interesting you went from the national underwriter to that. That's a very unusual move. I've known you, of course, with the national underwriter for how long were you with the national underwriter? Many years.
Wow. Well, first of all, George, I started when I was 14. I was
yeah, sure.
Years, so.
Yeah, right. But
it actually, George, it wasn't such an unusual move because at national underwriter, if you recall, we did do a lot of research of our own while I was at NU, and we also worked in conjunction with research partners, one of which was Deloitte. In fact, we did a major study of property and casualty producer attitudes towards their carriers a few years ago, which is how I became acquainted with the Deloitte insurance practice and its research team, and ended up starting to work there and actually managing the research operation back in October 2010.
Perfect move. And then I read your blogs still on Property Casualty 360. That's where I got this, as a matter of fact, this idea to have you talk about. I read another one of them today that you did, and you do those pretty often, I think. Well, I'm looking forward to it. We've been working together for a long time, and it's the first time we've ever recorded, I think, don't you? All those 30 years. Yeah. Well, look, let's go at it. Why should agents be worried about this stuff?
Well, it's interesting. And, George, first of all, when I started actually at National Underwriter back in 1981, I was my first job there was the agent broker editor. So the agent has always been very near and dear to my heart and front and center in my coverage of the industry over the years. But frankly, if you are a small business insurance agent today, depending on how you conduct your business, you may have problems to worry about. And why might that be? Well, our assumption going in was that with so many individuals, whether in their personal financial dealings or in their running their business, so much of it is done online today that we felt that a significant portion of this audience might be ready, willing, and able to shop for and perhaps even purchase their small business coverage over the web without an agent or broker to advise them or to help them complete the transaction. Now, it would depend on the circumstances and if they have the opportunity to do that, because, George, I do want to emphasize now that there's very limited capability within the industry to actually sell commercial lines direct to consumer. But that has started to change. There are already a number of carriers out there that are starting to write direct. And we feel, from our personal experience and speaking with our clients, there's certainly a lot of interest in this, in this endeavor, both as a potential opportunity for carriers to open up a new channel, not necessarily to replace the agent channel, but to be complementary to it, and even among carriers that are dead set against selling direct and want to stick with an agency distribution system. They're very concerned about the threat that a direct channel might pose in poaching their market share. So no matter what type of carrier you are, out there, they're concerned about this, whether they should get in on it or they're going to have to fend against it. So to test out our theory, we did some original research. We had 2 focus groups in the summer 2012, and we followed it up with a survey of over 750 small business buyers. The vast majority of them were owners of their business. It was from a variety of industries. It was all firms, ranging from single proprietorships to no more than 25 employees, and we had quotas in the survey so that we had a representative sample not only by industry but by size of business on revenue, size of business on number of employees, so we'd have a fairly representative sample of the country at large. And so what did we find, right? I feel we should have some dramatic music here, right? We found actually there are 3 categories of small business buyers right now. The first is what we were calling the eager beavers. These are people that who said in our survey that they're very likely to buy direct 1 or more lines of their small commercial coverage without an agent involved if they had the opportunity to do so. It's about 1 in 5 people, about 16%. Then we have the fence sitters. These were folks that literally are sitting on the fence. They said they were somewhat likely. It would depend on how big of a discount they might get. It would depend on how easy it was to apply for the coverage, but they were definitely open to the idea. So that really right there sets out about half the market is at least open to the idea of going direct. And then you have what I call the naysayers. These are folks that said it's not bloody likely. They're not going to buy under any circumstances without an agent or broker involved, and that does represent half the market. So that's a pretty good, pretty good sign for agents right there. Is that we're not saying they're going away anytime soon. Now, when we asked the folks who were interested in buying direct why they, were interested in doing so, obviously, as you see here, 84% expect to get a cut on the price that they're going to pay. They figure they're eliminating a frictional cost here, they're eliminating a step, and that they should benefit from this. What surprised me, though, is that almost half of this group, and this was the half of a half. It was half of the audience said they were at least somewhat likely to buy this way. 44% of them said they thought it would be easier to buy it themselves online. I didn't like hearing that if I'm a fan of agents. It's
right.
They feel somehow agents are getting in the way, maybe. And even worse, 40% said they expect to get more suitable coverage. Now, holy cow, right? I mean, you would think that, and in fact, in our focus groups, a number of the participants said that one of their concerns would be if I did it myself, if I bought myself without an agent, I'd be afraid of having coverage gaps.
Sure.
But when we did the broader survey, focus group, it's only, a relative handful of people. These folks were worried. They were, they weren't that worried about this. In fact, they thought they had a better command over what their exposures were, and they don't have a lot of time devoted from the agent to their account. It's a quick transaction. They thought maybe they could do it themselves.
That's scary.
So let's move on here to the next slide. Hang on a second. There we go. All right, so other takeaways from the survey. Let's talk about some of the negatives here, right? I noted that 84% said they expected to get a price cut. The discount expectations were not that high. That was interesting to us. In fact, George, 6 out of 10 that we surveyed said that they expected to get 15% or less in terms of a price discount for going direct. That sounds about like the size of a commission for an agent, doesn't it? 15%.
Yeah.
And in fact, 1 out of 4 said they expected 10% or less, which is fairly modest, I think, in my experience. So there were folks that said they want 16 to 20 or even more than 20% in discounts, but they were in the minority. So it's what this tells our company clients is that this is doable. I can deliver it. I can cut premiums 10% by cutting out the agent. I can do this. Another one here is, okay, we had thought going in that this is for the kids, right? This is for the new breed, the new generation of buyer.
The millennials.
People in their 20s, right?
Yeah.
And in fact, while we did find that younger buyers were definitely more likely to go direct, there were significant segments, both by age and by the size of the company. We figured we found that the smaller companies, especially those with revenues of less than $250,000, for example, were much more likely to do this. And we found that younger people, like those in their 20s and 30s, were more likely to do this. But it wasn't like a huge difference. And there were even people that were in their 60s that there were 10 to 15% that said, yeah, I'd give it a shot if the circumstances were right. So you can't just count on this as a generational thing. It may cut across your book of business. Another thing we found out that we found very interesting is that if people have purchased a personal lines product online, like auto, homeowners, or life insurance, they were far more likely to say that they were an eager beaver when it came to purchasing small commercial direct. In fact, just as an example, among those buying that were looking at property insurance for commercial lines,
right,
only 12% of those who had not bought a personal lines product online said that they would, be at least somewhat likely to do this, compared to 52% who had bought a personal lines product online.
Well, that tells you something.
And that goes across the board. It was 7% on workers' comp who hadn't bought online for personal lines versus 46% for those who had. So that's sort of the gateway for this. So we thought that was very interesting. So for personal lines companies that also have a small business lines component, and there are carriers out there that have that, it would be very easy for them to transition and cross-market to their existing direct sales for personal lines, and if these people do own businesses, to approach them about buying commercial direct as well. In addition, George, we found that those who said they had shopped for insurance for commercial lines online, at least had looked at company websites or had checked out an aggregator site or any of the number of sort of nascent options that are out there, it was huge difference. It was those who had looked at company websites and had looked to see if there was a direct option, 48% of them said they'd be willing to buy direct versus only 7% of those who had only dealt with an insurance agent and just let them handle the whole thing. So it shows you that a lot of this, the fact only 16% right now say they were very likely to do this, this could mean that it's just so new that most of these business buyers have never tried it. They've never perhaps even thought of trying it. They don't know anyone in their business community, maybe at the Kiwanis Club or at the Chamber of Commerce or something. None of them, they don't know any of their neighbors who've tried this. But as this starts to pick up steam and people get personal experience or they get personal referrals from people who have tried it, we see that it could fall by the wayside, the resistance there, and there may be a bigger wave going on. In addition, we in our focus groups, this came up in particular, George. This was very interesting. People were saying to us, look, I've been with the same carrier, whether it's for workers' comp, property, or GL, whatever it might be. I've been with them 5, 6, 7, even 10 years. I'm very happy with them. Even when they raised prices, I stuck with them because when I had a claim, they handled it well. Everything was okay. I wasn't going to change for 5 or 10% if I was happy with the company, working with the same agent. But my question is, what did the agent do for me over the last 10 years except collect the renewal commissions? I hardly hear from my agent. It's really, I have much more of a relationship with my carrier, so why can't I just buy this from them if I'm happy with them? Why do I need the agent at this point? So it wasn't just folks that are shopping for the first time. It may be people that say, after a few years, the agent really is superfluous. All right, he put me with this company, but what has he done for me lately? Or what has she done for me lately?
We're back to communications 101.
Yeah, and there are some positives, all right? I don't want to be such a killjoy here for agents, because I love agents, right? But here's one of the keys that for people who are wondering, well, where am I going to fit in here, right? We talked to these naysayers, which remember was half the audience, right, that participated. 66% said they would not buy online direct because I don't trust an insurance company to deal with me fairly. 66% said that was by far the highest reason. We asked for their top. We gave them a whole list of reasons, and we asked for their top 3. 41% listed that as the top reason. The next highest reason was 14% for those that said their number one concern was I couldn't properly assess the financial stability of the insurance company. Mm-hmm. Only 12% said they won't receive enough individual service as their number one concern. So trust is a big issue, and that's important because people do trust agents. We found in our we did a whole series of questions in this survey about their relationship with their agents, and their trust levels were quite high across the board. Their satisfaction levels were quite high. But this is a very price-sensitive group. We'll get into that in a minute. In addition, I just love this, the idea of sleep insurance.
I never heard of it.
Up again. The idea that I can sleep at night, knowing that I'm covered.
Oh, okay, got it. Okay. Oh,
we
brother.
We talked to people in the focus group, and they said, this is all well and good, and I might save some money, but if I screw this up and I have a gap and I'm not covered for something, I'm not going to be able to sue the insurance company. They have lawyers on staff. I have no shot. They literally wrote the policy, right? So I like having an agent because it gives me someone to sue if there are gaps in coverage. I know these guys have professional liability of some sort. We know it as errors and omissions, right? And even a few of them in the focus group had this happen to them and had said that it was a fairly easy process to just file a complaint, have the agent file a claim with their insurer, and they got compensated. So they say, I guess I'm on my own without the agent, and yes, you are. That's quite true.
That's amazing to me.
For these guys to think about, and it's something for agents to market as they say, look, if someone's coming after you direct, who's going to look after your interests if something goes wrong? This is what I'm here for. So that's pretty important, and that's how I follow up here with this last point where I say, yes, indeed, that they have very high levels of trust and satisfaction when it comes to their agents. However, one of the number one reasons why they changed agents, when we've asked them, have you ever changed agents, and if so, why? 40% of them said the agent did not get me the best price for my insurance. Yikes! Why did you change insurance companies? We asked them. Right? It was almost 90%. Said it was a lower price offered by my new insurer or a price increase levied by my prior insurer. So these guys are price sensitive. So yeah, they love the agent, they're satisfied, but wow, if you can get me 15% off, I'm listening. I'm willing to listen to you, okay? So what can agents do to protect themselves, right, George? What can
Good
they
question,
do?
yeah.
Right? So we asked these guys that we surveyed, to these small business buyers, what does your agent do for you? How do you characterize your agent's service? And we gave them 3 choices, and here's how it broke down. And I'm happy to say fewer than 1 in 5 was in that dark blue category. These are the price shoppers and the policy peddlers, I call them. These are the buyers talking, right? They say my agent mainly shops for and identifies the lowest price option for the coverage required. So they're going strictly on price. It's a commodity, right? Then the rest of the audience was split almost in 2, a little bit of an edge, 44% for those more standard. They give me a little more than just a quote. They give you options of coverage. They compare several parameters, and not just the price, the claims reputation of the company, how good the coverage is, et cetera, et cetera. That's better. But here's the ultimate, is to be a consultative agent or broker. That was 38%. These folks said that my agent or broker takes a consultative approach. That means you provide not just a policy, but advice on helping them identify their risks and helping them mitigate it, as well as taking a leading role when a claim is filed and helping shepherd that through. So it's very important, and we'll get into this in a moment, but this is a very important thing for agents to keep in mind, is they talk about fortifying their position here. So I want to emphasize, we at Deloitte are not in any way suggesting that agents are buggy whip makers, as you recall. It was one of the first stories I wrote. I won't say the company that predicted this, but it was over 30 years ago. They said agents are going by the way of buggy whip makers. They're not necessary anymore. As we know, agents are stronger than ever. They're bigger. They're more sophisticated. They're higher tech, etc. However, it doesn't mean they're invulnerable. They have to keep evolving. So what do they need to do to defend themselves against those who would market direct to consumers? Well, for one thing, we are urging people, don't panic. don't panic, okay? For the moment, as you saw by the numbers, it's a fairly small portion that are primed for direct sales. And the proof will be in the pudding to see if these eager beavers will eventually do it when they have the opportunity to do so. As I said, there's not a lot of companies selling direct now, but they are coming for you guys. I'm telling you right now. And it is also right now, as we saw, it's concentrated mostly among smaller buyers, and that's a difficult market to serve profitably for agents. It's a fairly low premium. It's an even lower commission. It's a volume business. And maybe there's a segment of the market that should go direct. Maybe the agents can't economically provide decent service, at least customized services, to at least a small segment of the small business population. These are very price-driven people. They're not getting a lot of service from agents now because agents just can't afford it based on what they're earning off these accounts, right?
Good point.
So that's sort of interesting. And how about if you can't beat them, join them, right? This is not the end of the world, guys. Carriers may yet be able to leverage the direct channel to the benefit of agents and to their mutual benefit. And how would they do this, right? Well, for one thing, a lot of times, for those handful that are selling direct now, what they do is they have a target in mind about the size of account, the sophistication of the risk, the complexity of the coverage, etc. If someone comes over the internet to them looking for coverage, and they look at them and they say, "This isn't our target. This risk is too complex to do through our rating software, or it's not exactly the type of business we want to write," they can use that still as a prospecting tool to refer them to agents. So agents still may get referrals from their carriers through this channel. In addition, carriers, once they sell the business, you still need somebody to keep an eye on these people. Now, we have been suggesting in our report on this topic that carriers are going to have to bolster their customer service rep core so that people can get folks in real time to discuss claims or coverage issues or whatever it may be, of the million and one things that people now go to their agents for. So it's quite possible that companies, rather than boosting up their own internal costs, might see if some of their agents want to be assigned some of these accounts as service providers for a lower commission, of course, but on the other hand, the agent didn't have to spend a lot of time and money acquiring the business. So if the acquisition costs are assumed by the carrier, maybe they would accept a lower commission in return for, taking on an account. And in that way, you might even be able to cross-sell them other lines. So it may be a win-win-win yet. For some agents that are focused on smaller businesses, they may be in trouble. And if they're just selling them based on price or, maybe basic coverage terms and conditions, they could be at risk. But that doesn't mean that the majority of agents are going to be at risk. However, as I emphasized here, and here's the next piece of the puzzle, agents do need to start offering added value if they don't already do. They certainly can't afford to take any renewal for granted, thinking, well, I've been representing this buyer for 15 years, and there's no way he or she would buy direct. They might very well buy direct. Times are tough. The economy is still not going to fulfill all cylinders by any means. And if they can save 10, 15, 20% on their insurance by going direct to the carrier, especially if they've been with the carrier for a number of years, it's really tough to justify the agent's role in that case. The best bet is to try to be the risk manager for the client, not just a policy peddler or a price shopper. And the way to get to a buyer's heart in that case may be, it's not just you're giving them certificates of insurance or anything like that, but certainly you want to be able to help them through the claims process. You want to be able to offer, loss control advice so that they can maybe have some control over their premiums from year to year, and whatever type of risk management support you can give them. That means being more consultative. It's being more holistic, and when I say holistic, that means looking at the totality of risks, not just the insurance component. You need to be adaptable and creative, and certainly nimble. And the nimble means that you have to be able to roll with the punches, change with the times, and folks' times, they are a-changing.
Good.
I won't sing because there's a restraining order out on that.
Thank you, Sam. I appreciate that.
We'll try. And what more should agents do? A few other steps here. How about doing more cross-selling? And I'm not just talking about selling commercial auto to workers' comp insureds. There's a whole world out there. It's funny. We've been preaching this for 30 years when I was at National Underwriter, selling more life and health insurance. Retirement planning, huge. Over the course of this survey, because our Center for Financial Services is interested in investment management as well, we asked these small business buyers about their retirement needs. 1/3 of them do not have a plan of any sort to deal with retirement, and they do not consult an advisor about it, right? Another 14% have spoken with an advisor of some sort about their retirement but still don't have a plan. That's half of the audience out there.
Wow.
Half of the audience, right? Another 15% have a plan but haven't talked to any sort of financial advisor about it. So we don't know if the plan is any good or whether they know what they're talking about. Only about 1/3 that we surveyed said, yes, I have a formal retirement plan to account for my savings and income needs when I'm ready to quit, and I have an advisor who helped me put it together. And this is very important, George, because what we found here, now get a load of this, we found that those who do not have a formal retirement plan, only 18% of them said they feel very secure about retirement versus 53% who have a formal plan. That's a huge difference. So just having a plan in place gives them a huge sense of satisfaction. And what we found in earlier research in a separate report that we did on retirement planning, we found that folks are 3 times more likely. I think it was 13% compared to 40, compared to close to 40% of those who had some sort of an agent or financial advisor had a financial plan. So those who have advisors or some sort of agent are more likely to have a plan. Those who have a retirement plan, much more likely to feel secure about what they're doing. So I know a lot of P&C agents out there think this is not my thing, this is not what I do. It's really time to start partnering with a financial planner or a life and annuity agent, or get somebody in-house that can handle this. Because even if you lose the small, when I talk about cushioning the blow, even if you lose a piece of their small business, maybe their property goes direct, or maybe their general liability goes direct, you still could have opportunities to sell to these people. And it's unlikely they're going to, if they're going to go on their own for retirement. And if they do, as you can see by our survey, they don't feel very good about it. So that's one thing they could do. And then this may be sort of a radical concept for some, although it's not a new topic. The notion of wean off of the commission-based system a bit. A lot of agents I've heard have told me over the years that, look, I can't do these value-added services because the commission just won't cover it. It's just not worth it to me. But on the other hand, if you don't deliver them, you may lose the account altogether. So is it time to start introducing the idea of fee-for-service as opposed to a pure commission model, either in conjunction with a commission or instead of a commission? It's a way to get greater transparency. It's a way to prove your value because you can show for year to year, how my loss control efforts are lowering your premium. For certain types of agents, especially for bigger accounts, this may be a way to go. Just a suggestion. And I talk about fighting fire with fire here. Hey, guys, do you have a digital strategy of your own to sell insurance over the Internet and to service accounts, not just on laptops and desktops, but on mobile devices? Why not sell online? How about becoming an aggregator and, trying to get, business, not just the old-fashioned way, but, through the web to work with search engine optimization and social media strategies to make yourself more of a player online. Don't surrender the battlefield to the insurance companies that are going to sell direct. And when I say fight fire with fire, George, I'm speaking literally, as we'll see in our next slide.
Boy, what's that? I looked at that slide when you said it to me. What the word is that?
So this was a bar that this is their thing, I guess. And how would you like to write this online? Would this come up in an online application? I don't know. But an agent who drinks in this bar might know.
More importantly, know your customer. Well, that's the model, of course.
Know your customer. If it's not just a normal tavern, it has a fire-breathing bartender, you got issues as you're trying to place this account,
Well, Sam, let me just comment on one thing before we finish, and you're so right about that. In fact, you're still right about everything. I was very quiet because I was learning. I read, but I still. But the irony of this is that in 3 weeks from now, I have a very good friend whose name is Barry Wells. He's coming to here to the States. He's in England. He started the online commercial line selling online in London, in England.
Mm-hmm.
He started the same thing to compete with the online direct like the Geico's, but now he went to commercial lines. If I told you what he sold that for, if you think it doesn't work, let me tell you something. We're talking multiple millions that Barry made because he had that concept. And they are doing it, and it is working in London. And I'm so glad that you brought it up here because I'm going to be passing the word here on it. Do you have any?
Well, George, I'll tell you, actually, they are way ahead of us in the UK on direct sales of small business insurance. And
yeah. He was
coming here, and and for those who are more interested in more information, you can send me an email. There's my address there. We have a full white paper on this, including the research results, and it's targeted more towards insurance companies, but it wouldn't hurt for agents to sort of take a look behind the curtain and see what their what their carriers are thinking. And I can assure you, carriers are thinking about this.
And they can send it, and you'll send that to everybody that asks.
I can, yeah. Anybody who emails me, I'll be happy to email you back a PDF copy of our report.
Oh, that's a beautiful thing. Well, Sam, what can I say? Thank you again. It's a wonderful job, as usual. I'm never surprised when I talk to you. I have just a couple of one more thing to mention,
Sure.
And that is, well, I'm asking people if you have additional ideas for speakers or topics, please let me know. I'm not running out. We're going to have 80 of these online by the end of this year, and we've got the very best, like this one, on the topics that are important to you. But if you know something that you'd like to hear covered from I have all of these great speakers like Sam out there who just are dying to tell their story. So I leave you guys with that. Don't forget to go back to your email, and you can sign up for the, you can get the archives there with Rough Notes or Agencies Online. You'll see it. And also, don't forget to go to the quiz flash of the day, as well as the E&O tip. Sam, I thank you again, my friend. You did an excellent job. And for the rest of you, I'll see you next Monday morning.